Hey guys, how's it going? It's Andy. I've been reading another investing book, but instead of talking about how to buy the best stock, we're talking about psychology. The book I've been reading is called The Behavioral Investor, and it's going to be made into its own long video talking about my key takeaways, because while most channels that you see on YouTube talking about investing, they talk a lot about the actionable stuff where it's like, this is how you read a chart, this is how you look at a financial report, and this is how you find the best stocks to buy right now. And while that's important in its own way, I think something that's not appreciated enough is the psychology behind investing. The whole point of this book is saying that humans are not designed to be good investors. When you're out in the wild and the evolutionary history of humans, when something goes wrong and you get a response to it, the normal thing that you do if something's going poorly is you try to get away from it. In investing, if things go poorly and the stock market falls 5%, the initial response is to sell. We know that humans are bad investors, so it's this training of the mind to understand that yes, we are bad at investing and how we can build around those flaws and become successful investors. There's one main takeaway that I've gotten from this book so far that I think can make everyone a better investor just by making one simple change. And while this seems like a one type of pill that you take to get rid of all your problems, I think it's something that a lot of people don't really think about when it comes to investing. Today we're going to be talking about confirmation bias, and this is something that you hear a lot with politics as it's become increasingly more common with social media and how people uptake information. But for people that don't know, confirmation bias is the tendency to favor and search out information that confirms or supports one's prior beliefs or values. And so when this comes to politics, you can find whether it be newscasters or different channels that put out content that are designed for a specific side of the political spectrum. That's very easy to see. But when it comes to investing, it's the same thing. It's not as easy as some people go to NPR for their news and some people go to Fox News. When it comes to investing, we're all kind of under this cloak of going towards the same goal of being successful investors. But when you look at it, it's really easy to see that confirmation bias has a huge impact on how we make decisions as investors, and that's what I wanted to talk about in today's video. So the first example I want to talk about is, say you buy something like a General Electric stock. You feel pretty good about it, but then a couple weeks later, the stock has fallen 5 or 10% and you're not feeling as good about it. So you hop onto YouTube, you make a search for a GE stock analysis, and you find this good looking dude talking about how they like GE for a long-term investment, and you feel a little bit better. Is that the right thing to do? No, you're looking for information that is going along with your previous thoughts on GE. You weren't feeling as comfortable with how GE was moving at that time, so you look for other information that confirm that bias that you previously had. That doesn't mean that you're correct, it just means that you're going to be less upset about the stock moving down because you've seen someone else say similar things to what you believe with the future of the stock. So let's talk about forums like wallstreetbets, because this is one of the places that I see confirmation bias take hold in a crazy degree. When you look at wallstreetbets, the top thing that you're going to see for the top posts are things that are upvoted the most. What are the things that are going to be upvoted the most? It's going to be stocks that a lot of people own, and it's people talking about why they really like it. If you were around for the GameStop situation, people that were talking about, GameStop is incredibly overvalued right now. If you're in, you should get out as soon as possible. That got downvoted because no one wanted to see that. Everyone wanted their favorite stock to go to the moon, and I think that GameStop was a fantastic example of confirmation bias. Those that were buying it and were making cases for why they think it will continue to go up were upvoted so people would see more of it, and some of the top posts of that year were showing that they are holding, and that goes along with people that were also holding, going along with their bias that GameStop was going to continue to go up. So what's the problem with this? For one, most people knew deep down that GameStop and AMC were going to fall eventually, but they didn't want to believe that the fun was over, so they kept searching out information that would push this belief that GameStop and AMC were going to continue to rise. This leads to emotional training, which has become one of the core tenets that I'm trying to push back against. For those of you that don't know, I started out as a day trader because I had this level of confidence that was a little too high. I started getting involved with the stock market back in 2018. I started day trading. I thought it was going to be really easy. You just buy low, sell high. How difficult could it be? Then I started letting my emotions get into my trading. I started off, trying to find these rules that were very set in stone, where if the stock did this, I would do this. If the stock went a different direction, I would do this. So I would take the emotions out of it. Money is a very emotional thing, and that's why I always recommend that people get started investing with the stock market with very little money, because once you see your money start going down in value, it hurts. So I would start buying into stocks and I would hold on to them because I thought that they would recover. I would join Discord servers that would talk about why they thought my favorite stock was going to recover eventually. Next thing I know, I'm holding a stock that's down 75%, and it all goes along with this confirmation bias. So the two situations where I see confirmation bias affecting emotional trades is one, doubling down on losing trades. Humans are really bad at admitting that they made a mistake, and I think most people would agree with that. Everyone wants to think that they are better than average, when if you think about what average means, most of us are average. That's why I always talk about the S&P 500 as being a very average thing to invest in, but it gives fantastic returns, and you don't want to be the person that's below the average. You want to be at or above the average. A recent example I could have come up with is with my Peloton stock situation. If you missed that video, I'll link it above right now. For those of you who don't know, Peloton was a stock that I thought was going to be a very good long-term play. I love their business model. I thought their recurring revenue with their subscription model was going to allow them to weather the drop in the stay-at-home stocks that we were seeing at the end of 2021 going into 2022. What I could have done is gone onto YouTube and find other YouTubers talking about why they thought that Peloton was a good investment for the long term. This is talked about in the book as being one of the worst thoughts you can have, is that this time it'll be different. I could have seen that Peloton situation, seen other people talking about why they think it'll recover, and then doubled down on the bad trade that I already made instead of admitting that I made a mistake and getting out of it. The other situation is bag holding. Bag holding is the idea that you are just trying to get back to where you started. It goes along with the sunk cost fallacy, which means that it's hard to break away from something that you've already spent time and money with. When it comes to a losing stock position, it's very difficult to admit that you made a mistake and to sell out of that position. So as a result, you're bag holding, just hoping to get back to even. And if you go onto YouTube and you find people talking about they're in similar situations that they think that it'll recover, you might hold longer, and if the stock continues to fall, you're going to be in a worse situation than you already were. So how do we fix this? For bag holding, I think the important thing to think about is the reason why I sold out of Peloton was if there was a mistake with your broker and they sold out of your position, would you buy it back immediately? And if the answer is no, I would sell. That is how I'm viewing my decision making going forward. But when it comes to confirmation bias, as difficult as it sounds, I think we should be looking for information that goes against our preconceived notions. If I love General Electric stock, how am I going to be more confident in my investment decision? I'm going to find people who have different opinions than I do, and then come up with arguments that I believe are better than the arguments that they had. If I think that General Electric is going to be a great investment for the next 5 years, and I can come up with reasons A, B, and C, and then I go to this person's video and they're talking about reasons X, Y, and Z why they think it's not a great investment, you have to come up with reasoning for why you think that they're wrong, and it's going to strengthen your argument. Or, which is actually a really good thing to do, is if you realize that your reasoning is wrong, that's a great way to break away from this confirmation bias and realize that you were wrong, and that is 100% okay. Investing is all about making decisions that are as far away from your emotional response as possible. And by going and seeing other people's responses to what you believe is a fantastic investment, at first you're going to see it as a threat. You think that GE is a great stock, you see someone talking bad about it, and your initial response is going to be, oh no, they're stupid. They don't know what they're talking about. I'm way smarter than them. If you can step back and try to come up with arguments that break down their arguments for why they think it's bad, that's how you become a better investor in the long term. It's very difficult to do, but I think it's something critical that most of us should be trying to do more. Instead of watching videos talking about why they love a stock that you already own, try to find a different viewpoint. And from now on, I'm going to do my best to make videos about stocks that I don't absolutely love, instead of trying to pan to all the people that love specific stocks. In the past, I went against my ethics and I made videos about momentum stocks that I didn't really believe in, instead of talking about why I didn't like them, because YouTube pushes videos along with confirmation bias for things that they think you agree with already. So if they know that you're invested in GE stock, they're going to push my video talking about why I like GE instead of someone else's video about why they don't like it. So we have to make an effort to step away from that and get away from the algorithm and find more information. That's why I think that if you can get away from confirmation bias, it'll make everyone a better investor in one simple step. Seek out information that goes against your current viewpoints and see if your arguments hold up. And that's how I think you'll become a better investor. I'm very curious to hear what you guys have to say about confirmation bias and the sunk cost fallacy. And let me know if you guys want more videos about this. I think psychology about investing is fascinating, more fascinating than looking at a chart for every video in a row. So let me know what you guys thought in the comment section down below. If you made it this far, I really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. I'm trying to reach 10,000 subscribers and I need your help to do that. Thanks for watching. I will see you in the next video.